Is Calgary real estate coming into bubble territory? Tune in to this month's market update to find out the full story. So the feedback is in. You like shorter updates and you want me to get straight to the point. So that is exactly what I'll be doing from here on out. So let's get to it. The headline from our real estate board was this: sellers market conditions continue to impact prices. So what does this mean anyways? It means that our current real estate market in Metro Calgary and the surrounding areas is tilted in the favor of homeowners and sellers. Now, when a real estate market is this way, home prices are on the rise and buyers are required to adhere to the wishes of the sellers. The idea of getting big discounts or great undervalued property doesn't really exist in a seller market scenario like we have now. Now, in today's update, I want to explain a couple major key elements rather than just hitting you with endless data once again, as it seemed to go over best with all the viewers. All right, item number one, our current market is paralleling one of the best market scenarios in Calgary real estate history. This was the run-up of 2005 through 2007. Many of you may remember those years, but if you don't, it's when, within a 3-year period, we basically doubled our average benchmark price here in Calgary and area. Alberta real estate was insanely affordable in relation to our high household incomes, and it was only a matter of time before things were corrected. We grew about 20% in our pricing year over year, then 30%, and then finally 40%. Now, I bring this up because it's the last time we saw sales values consistently like we are having right now, coupled with very low active homes on the market. The 2012 to 2014 recent run-up, you may remember, did not have sales figures as high and as consistent as we've been having. And it did not have nearly as low number of homes on the market as we have now. Those years had us year over year increasing our sale price by 8%, 10%, 12% respectively. So more of a modest growth range. The paralleling of our market with 2005 to 2007 also relates to our benchmark sales price. As I mentioned, we were too low back then, so we had nowhere to go but up. While Calgary over the last 6-7 years has been on the decline in relation to the rest of the developed world. While we suffered from oil price issues, political issues, pipeline issues, and so on, the world didn't. The world continued to see year over year positive growth in its housing sector. So again, for a powerful market center like Alberta, we find ourselves on the far inexpensive side of housing. So as the world emerges from COVID, as our economy here in Alberta diversifies, and our oil sector remains in incredibly strong demand right now, we are positioned to go through another run-up. Will it be like 2005 to 2007? Or will it be like 2012 to 14? Nobody really knows. But the parallels are obvious, and the upside is showing all signs are going to be positive for a while. Okay, item number 2. Should we be concerned about the Calgary and the surrounding areas and Alberta market being in quote unquote a real estate bubble, like some of the real talk that has been discussed around Canada? I don't think so, not one bit, and this is why. There is a difference between busy yet healthy and dangerously overheated. From our recent data, here are the few things I want you to consider. Our active number of homes on the market is low, yes, but we are still listing a historically high number of homes onto the market. In January this year, we listed about 10% more homes than last January. All of 2021, we listed more homes in 2020, 2019, 18, 17, 16, and I could go on. The growth we've had recently in our benchmark sales price is really a product of well-balanced positive demand, not due to overinflated sale prices, because there is nothing to buy like we are seeing in other markets, the GTA and the GVA. The market as a whole tells the full tale. It's not just those headlines you might read. So you'll hear from realtors, you'll hear from news outlets, you'll hear from the neighbors of price records being shattered, 100K over list results, and so on. So it's pretty expected that the overall Calgary and area market narrative could become a little bit embellished and thus slightly incorrect. Pulling some math of my own, I looked into a few extra data points to paint you the full picture here and to show you the true heat map of our market. Pulling up graph number 1 of 2, you'll see a chart comparing sales to list price versus price ranges. So what do you notice when you look at this? You will see that as we creep up to that $450,000 price band all the way through to about $850,000. That the sales to list price ratio is averaging right around 100% to a max of about 103%. What this means in layman's terms is that for the price ranges between $450,000 to $850,000, almost 9, sellers are basically getting what they're asking. Below $450,000, it starts to decline to about 96-98% of what they're asking. And then the same occurs when you get to about 1.25 mil and up to the upper end markets. So yes, the market is healthy. Sellers are basically getting what their advisors are suggesting is fair value. We aren't seeing, on average, those prices are being pushed 20%, 50% above or further. There are those exceptions, but this is not the norm. Will some very aggressive buyers pay too much right now to get the home they want or need? Yes, for sure, that's happening. But that doesn't mean it's driving all prices to a place of inflation. Now here's the second graph. It shows price ranges again, but now versus days on market. You'll have heard that homes are selling in a day. First day on the market, no conditions, and yes, this would be right. There are some like this. But again, they are the exception, not the rule. Homes under 400,000, lots of condos in those price ranges and townhouses, are still seeing days on market averages of 50 plus. Homes above 1 million, again, same thing. But the middle part of the market is moving fast, with an average of just under 30 days on market. But this still means not everybody is getting these unconditional deals day one when they launch. And my final point to this relates to something I comment on a lot. It's the sales just to new listings ratio. When I say this, I always use the word pace. The ratio for all of the Calgary Real Estate Board region so far in 2022, so all of January, is 80%. What this means, again, in layman's terms, is 80% of the new listings that we launched turned into sales within the month. Okay, not 100%, not 200%. The higher the number, over 100, means the more the market is swallowing up all the available homes. This is not the case with us at all. It's healthy, again, but not dangerous. We are not selling through everything that just hits the market. So it's with these 3 points to my headline of, should we be concerned about the Calgary and area creating this bubble territory? The answer is simply no. Now our market is freaking healthy. Yes, freaking healthy. And despite it feeling rushed and feeling maybe a little bit out of control, it's a great market. And one most of our country would rather be in, I promise you that. So, in a quick summary, as I leave you, the market is acting differently everywhere. Each district of our city, each satellite community, each rural county, each property type, and each price range. You need to have a detailed conversation with your local real estate advisor to be sure you're in the full understanding of how our current market scenario applies to your specifics. So if you need help finding a truly educated and reliable agent, don't hesitate to contact us here at Redline Real Broker to be connected with a real estate professional that focuses on your market segment. Thanks again for watching. Don't forget to subscribe if you haven't already, and please share this with as many people as you can that you can think could find value in this message. Remember, we release a new video every single week here on Redline TV. Thanks for watching, and I'll talk to you next month.